My name is Anish Chandak, and I'm an independent financial consultant. Today, I'm going to talk to you about what the difference is between an ETF and a mutual fund. Before we get into those complicated words, let's just start a little bit more basic and build to ETF and mutual fund. Let's think of a stock or a share in a company. A stock or a share in a company gives you the option to buy in to a company and be an individual shareholder and take part in the profits, revenue, and other business that that company conducts. You can have a stock of Target, you can have a stock of Google, you can have a stock of General Mills. Basically, that's your individual piece in that company. What ETFs and mutual funds are, basically a group of those individual stocks that some investor or financial institution or bank has decided to package together for you to be able to buy a bunch of different stocks as part of one overall group. Those groups are either ETFs or mutual funds. ETF, let's just give it the full form, which is what it is, exchange traded fund. So for an ETF, think about it as an individual stock, but it just so happens that that one stock is actually a group of other smaller stocks put together. An ETF can be traded very similar to an individual stock, where you can go onto the exchange, NASDAQ, what have you, exchange that security at any point throughout the day, earn a profit as you go. The difference between what an ETF allows you to do and what a mutual fund allows you to do is that instead of having the ability to trade constantly throughout the day, a mutual fund is only traded once a day. So the difference between an ETF and a mutual fund is that an ETF can be traded constantly throughout the day, and you can earn a gain or a loss as you trade throughout the day, versus a mutual fund is only priced once at the end of the day. And so your price fluctuation isn't as frequent as you can do on an ETF. Another difference between ETFs and mutual funds are their expense ratios. How much it costs some bank or financial institution to create that security for you to purchase and then overall manage for you. ETFs, because they allow the individual investor like you and me to trade that more constantly, overall management companies and banks don't need to monitor the individual security as closely. So they're able to give you that security for a lot cheaper. So therefore, your expense ratio, or how much it costs to own that security for you, is a lot less. Versus a mutual fund is typically tracked and managed more closely by financial advisors and financial experts. So you know that when you're putting your money into a mutual fund, it's being watched a little bit more closely, and the overall change that you're seeing is on a day-to-day basis. So overall, another difference between an ETF and a mutual fund is the cost that it holds for the individual investor to actually hold that security. ETFs tend to be cheaper to hold, and mutual funds tend to be a little bit more expensive for you to hold.